The U.S. and China agreed over the weekend to have a 90-day suspension of their tariffs, with the China or U.S. Decreasing the tariffs on China goods by all the way down to 30%, while China decreased the tariffs on U.S. goods to 10%. That has the U.S. stocks moving higher. That has the yields moving higher in the U.S. That also has the dollar moving higher. Gold prices are lower. Oil prices are higher. And in this video, I'll go through the technicals for the three major currency pairs to kickstart your trading day and trading week, given all those movements. So let's get started. Focus first on the 4-hour chart. And if we go back in time and take a look at this area right through here, this was swing highs going back to 2024 in August and September that capped the rises, not once, not twice, not 3 or 4 times right there before moving to that downside. We moved back above that area right through here and didn't return to it until last Friday when the price came down to that area. Actually dipped a little bit below it, but then rebounded into the close for the week. And then in trading here today, the price initially moved down to that area and then fell through it, falling below the 200 bar moving average on the 4-hour chart in the process, also below this swing high right through here. And as you can see, the price high has been able to stay below that level near 1.1145, 111.45, and after moving down to this swing area through here, let's put this chart on the hourly chart to see what that looks like from that perspective. And if I come up here, you can see how the price fell below that swing high right through here. That was a pretty significant high for the year before rotating to the downside. When we broke above it here, the price did come down toward it. Found early buyers against that level, increasing the level's importance going forward. So getting below that level was significant, and also staying below it is significant as well. That's our close risk for the sellers looking for more downside momentum, is stay below the 111.45 level. If we're able to do that, then the bias remains more to the downside. We can start to look toward the 38.2% retracement. That is, I have to go back to the 4-hour chart because it goes back a while. From the January low, the 2025 low, to the 2025 high. 38.2 comes in at 110.395. Getting below that level would be a significant or a target that would need to be broken to increase the bearish bias going forward. Otherwise, this is a modest correction within a more of a bullish bias to the upside. So 110.39, keep that level in mind. On the top side, watch 111.45. Let's take a look at the dollar versus yen next, and we'll also focus on the hourly chart. And if I look at the hourly chart, let's see what happens here. Actually, I'm going to go to the 4-hour chart. Take a look at this swing area that I have outlined through here as a ceiling, and you can see where it developed from. It goes back all the way to 2024, back in December to be exact, where we had a swing low right here and moved to the upside. From there, we came back down to it right here, bounced off of that level to the 100-hour moving average, came down to it here, tried to hold support, and then traded above and below through here as the market tried to figure out what it wants to do. I like the fact that over here we reestablished support here, broke higher, reestablished support here, broke higher, and then fell below it here. And the next highs came up short of that level. So this level is a key level, I would say, from a technical perspective, at going back in time, 148.56 up to 148. Looks like 72. If we get above that level, then we start to look toward the 50% and the 100-day moving or 200-day moving average. That's a green line in this chart. Those levels come in 149.37. So, but keep this area right in mind. Right here, we're stalling at it or trying to stall at it as we enter the New York session. If we're able to do that, then a rotation back to the downside might be warranted here for this pair. 148.10. I'm not sure where that comes from. Let's go to the daily chart. See if 148.10 comes into play. I'm not sure, but I'm not sure it's that significant of a level. But on the downside, I would probably look down toward this this area right through here around the 38.2% retracement as the next key target on the downside if the price is going to continue its upward momentum. Good news for the dollar versus yen is that we are above that 38.2% retracement. So that's always a minimum retracement that traders like to see, and staying above that level would be key going forward. Finally, let's look at the pound versus US dollar. And it looks like we moved below a key swing area right through here, where we had a swing high, forming this ceiling. You can see the number of different times the price came into that ceiling. Then we moved above it and started to use that level as a floor here, 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 and here, and here before moving to the upside. So that was significant, and I like the fact that we broke below it, and we also held below it on the corrective move off of the 38.2% retracement. That's a pretty good hold right there between near the 132.01 to 0.88 or 07 level. So stay below that level is more bearish. Now the 38.2% retracement has been broken, but as you can see, we're trading above and below it in the early U.S. session here. So we're going to watch that for key clues. If we are able to get below that level and stay below that level of 50% retracement, is going to be a next target on the downside. On the top side, we want to stay below this level up through here, near the 132.01 to 132.07 area. If we're able to do that, maybe even to this low price right here from last week's trade or last Friday's trade, which looks like it's around the 12 and 15 level. So I'll watch the 01 to 15 level on the top side. If we can stay below that level, the sellers still have control. Watching the 38.2% retracement as well for other clues to the downside. So there you have it. Look at the three major currency pairs. Lots of change, and in the markets over the weekend, we'll see if they can continue the dollar buying momentum in trading here today. My name is Greg Mikulowski. Good fortune to trading. Bye-bye now.